This is how I made $413 day trading NQ on November 26, 2025. Today is the day before Thanksgiving. So I was coming into the day not necessarily not expecting good price action, but not going to force a trade that wasn't there, in my opinion. Yesterday, we ended up having some decent price action. I had a strong bias for the day yesterday, but there was ultimately no SMT for me to take my trade off of. But coming into the day today, we can see really this whole week we filled this gap on the 4-hour on both indexes. And normally when we see a big swift price movement like this, price is normally very swift to recover in the same regard. We can see here, swift move up, swift move down. Same here, swift move down, chop, swift move up. Just when we have these big moves like this, price is super illiquid and there's not a bunch of contradicting orders. So coming into the day, what I had noticed, I've got the 10 o'clock candle close here. Immediately what we have going on is a high time frame SMT where ES is above this high and this high. So we have this daily SMT that has formed on between the indexes here, where ES is taking out this daily level and is in this 4-hour daily fair value gap, if you will, and NQ is not. So if we drop down here to the hourly, we can see more of what's going on here. Coming into the day, what we obviously do is start by marking out our hourly liquidity levels, our prominent levels of liquidity. And to the upside, what we had was this high. If I can even get it marked, yep. This might not be exactly right, but I'm not taking time to mark all these levels exactly. So on NQ, what we had was London session and Asia session high. Same with ES. I got us here on the 15-minute chart. Let me get to 9:30. Yeah. So we have London session, Asia session high. That were strong draws on liquidity. For me personally, ideally coming into the day, I would have liked to see a retrace at open. I would have liked to see a retrace and open, which then would have given NQ the ability to come up and take out London Asia session. And it still would keep us under this SMT up here, which is at this top yellow line, as we can see here. So until ES or NQ breaks this top yellow line here, this SMT short still remains valid. So with how close we were to London and Asia session high, I would have liked to initially see those get taken out and then a reaction from there. Now, whether that be, at open, we get a retrace, put in an SMT from, maybe here to here and here, down to here, which then allows NQ to run up and take out these highs and then do whatever it wants to from there. Or immediately at open, take out these highs and then go from there. And what we actually did was the latter. So if let's see, this is London session low on NQ, same with ES. And like I mentioned, with how far away we are from London session low, I was really not liking to target London session low as a take profit one, if you will. So I would have much more liked to have price retrace, maybe fill in one of these gaps here, and then target longs. But as you can see, if I drop down here to the 5-minute, what we have happen is at the 9:30 open, we have price immediately come up and take out London and Asia session highs on both indexes. This is the 530 candle, 535 candle. Both opening candles come out, take out both Asia session, London session highs. So from there, the only SMT that we have going is at this high time frame level up here. And you can see that ES is obviously way above this level here, whereas I have this yellow level marked. This is the same corresponding level on NQ. So our high time frame SMT still has the ability to play out. So from there, I'll show you what I mean. So if we jump 10 minutes ahead, 9:45, this is what we have at the time. We have a 5-minute SMT where ES is putting in higher highs on the 5-minute and Q's putting in lower highs on the 5-minute. So what that tells me is their orders want to play out this high time frame SMT. So I also begin to shape my bias around that. And what do I see? I see all this low resistance 5-minute liquidity here. What do we have? We have this low here. We have, I'm gonna mark these right. What is this? This low is 89. We have this low here. We have this low here. We have these two equal lows here on the 5-minute, both at 173. So once I see that we have 5-minute SMTs, I immediately jump down to NQ and see that we have all this low resistance liquidity that could be easy targets for NQ to target based off this 5-minute SMT, which then it can allow to do whatever it wants. Go higher, proceed to take out London session, even though that's not unrealistic, but a far away take profit, especially since we're up here at the macro. I mean, we're 263, we're 140 points away when at the 950 macro. So once I see this 5-minute SMT, what I do is I drop down to NQ. And at this point, this 5-minute SMT is still valid, right? This 5-minute SMT is still valid because NQ is underneath this high, whereas ES is pushing higher and higher. And we have all this low resistance liquidity to target. So, and what we actually do before the macro is put an SMT with this level here. So, but this was 7 minutes in the open, so I was not really wanting to take a short 7 minutes in the open. But what we do is what this looks like is a 5-minute push down, our 5-minute retrace, and then once we get our 5-minute retrace, what we do is we look for a 1-minute break of structure to the downside. So if we were going to get a break of structure to the downside on the 1 minute, I would have entered in on a 1-minute break of structure because we have the high time frame SMT, we have the 5-minute SMT. Dual SMTs, I'm going to not mind entering on a 1-minute break of structure, even though we don't have 5 minutes order flow being respected. We still have 5-minute order flow to the upside. I'm willing to try to get in on this trade early on 1-minute break of structure. But nonetheless, we never get the 1-minute break of structure to the upside or to the downside until we push past and form a new high and invalidate the 5-minute SMT. So what we do is we invalidate the 5-minute SMT, right? So because we make a new high on the 5-minute. 5-minute SMT is invalidated. But if I pull back up ES here, we still have the high time frame SMT. And I told myself I was really not too keen on taking this trade if we didn't have the 5-minute SMT. But I told myself, I said, if NQ, after it sweeps out this 5-minute high here, because if you think people who went short here and are waiting for this SMT to hold, there's a lot of rest orders here, stop orders here at this high here because this invalidates the idea. So I told myself, if we make a small push past this and immediately get a strong reaction to the downside, picking up the rest of these stop orders to then move us down, I'm willing to enter in small size to target these 5-minute lows here. And that's exactly what I did. We make a push up, immediately get a strong 1-minute break of structure to the downside. And what I did was I waited for this candle to retrace a little bit. What I did is I entered in top tick of this next candle where this break of structure level is, and then price proceeded to move to the downside. And what I was specifically paying attention to, where price was bouncing a lot during this time, was this 5-minute fair value gap here. I'll mark it on all the charts. And you'll see what I mean here. Yeah. So this is a pre-market 5-minute fair value gap that price bounced out of on this 5-minute push down, and it also bounced out of it multiple times here. So you can see multiple wicks, multiple tests of this 5-minute gap here. So once we get this 1-minute break of structure, like I said, I entered in one con, very small size. Like I said, only made $400 on this because I've not been trading much recently. Looking back, price action hasn't been the best for me. Like I had been saying, we haven't been getting a bunch of ideas that have strong SMTs, strong confidence. But at the same time, with my job, I'm an accountant, very busy during October, November, with corporate tax deadlines being pushed, extended. So those are the extended due dates. So I've still been looking at the charts every day, but I've been less inclined to take a trade that didn't immediately pop out to me because I have been working so much on my work at the same time. So that being said, I'll get back here to this trade. 82.5 risk enter in here, risk is high. And what I did was, since I only had one contract and we're still maintaining 5-minute bullish order flow, and we're such in a strong trend on the hourly and 4-hour, I was not discounting the fact that we could have easily just taken out this 5-minute level here and then put in an SMT that allowed ES to go higher and us immediately to rotate to the upside. But also at the same time, these 5-minute equal lows were strong draws on liquidity. So there could have been arguments made for both. Where I did have one con, I did set my only take profit here at this 5-minute low. It was a 1.5 to 1 risk to reward, so a good risk to reward, especially for one contract. Would have been close to 2, I believe, if I would have set take profit at these 5-minute lows. But I'm not upset by it because you can see what we ultimately end up doing is putting in a SMT with these 5-minute lows. We end up just sweeping these 5-minute lows here to then rotate us higher, because as we are on such a strong trend on the hourly and 4-hour, and we need to finish filling in this gap. So what this looks like in practicality, like I had just said, is up. We get this strong higher time from SMT to then rotate us down, sweep out the slow resistance 5-minute liquidity to then rotate us higher. That's exactly what we did here. And now later in the day, we have invalidated this high time frame SMT at both daily levels here. We've taken out, these daily levels on both indexes, and now we're just floating in no man's land in this fair value gap over here. But today was a good trade. I took it small size because I did not wait for a 5-minute, inverse of a gap or break of structure. What that would have looked like is waiting for this gap here, because it was respected so highly, or a 5-minute break of structure here. A 5-minute break of structure would have been at this level here, which had already been our take profit 1. Candle closed all the way down. Yeah, this is our 5-minute candle close. So if you were going to take a short setup based off of a 5-minute break of structure and a retrace, I suppose what you would have waited for was this retrace on the 5-minute into this inverse gap, or what we have at the time is this 5-minute fair value gap from this low to here, You can see that this 5-minute fair value gap is tested perfectly. That would have been a good entry if you were going to target shorts. On the 5-minute retrace, your break of structure is right here. But all this low resistance liquidity here has been taken out. Could have made an argument for London session lows, but I feel like the main objective was already taken out. We are in such a strong uptrend. I was not going to bank on us taking London session lows and running all the way down here to take out this liquidity here, because we already had made such a strong push up. I was not going to take a trade short based on this 5-minute retrace and 1-minute confirmation short. And then ultimately it would have gotten stopped out. But that was today's trade recap. Thanksgiving is tomorrow. Friday's Black Friday. I will not be trading Black Friday. It's going to be low volume. Monday, I will be on the charts. Tuesday through next Friday, I will be out of town in Orlando for training for work. So other than Monday, this Monday coming up, it will be another week before I can take a trade. But that was today's trade recap, and thank you.